Good morning, everyone, and thank you for being at our executive panel discussion this year. It's going to be a great discussion. We got a fantastic panel. Couple things as we get going. First thing, silence your cell phone. If you need to take a phone call, please step out because it's distracting otherwise. We may have some time at the end for questions, but we got a lot to discuss. Before I get into the panel discussion, I would be remiss not to introduce this group of fine young men. Fellas, please stand up. This is the Villages Construction Academy and their instructor, Bruce Haberly. And these guys are out of the Villages, Florida. In the last 6 years, they're working on their 10th house for Habitat for Humanity in the Veterans Village. Each academy up in Lake County is doing great, but they're doing particularly great. And they're here to learn more about the industry, so I want you to welcome them. First, I'd like to introduce our panel. Our discussion points today are what are the new norms and fundamentals in our industry, and are we keeping up? And for the last several years, we've talked about supply chain disruptions and those type of issues. Now we're facing a fundamental housing shortage, but we're facing real changes in fixed costs and how you do business. And there are more outside elements affecting our business and our industry more than ever. Our first panelist, I'm going to introduce Chris Lee. He's the president and owner of First Choice Door and Millwork in Orlando. He is one of the largest privately held millwork shops in Central Florida. He was 2023 chairman of the board for the Florida Building Material Alliance and a leading voice in the industry. Wes Robbins. Wes is the current president of the Greater Orlando Builders Association, as well as vice president and partner with W. Robbins and Associates. He specializes in builder services throughout the state of Florida. He's represented builders on the local, state, and national levels on various home builder committees. Chris Coghlan, he's the CEO of Fastening Specialists, which simplifies the distribution chain of building materials. Plus, he enjoys investing in startups that specializes in manufacturing sports technology. After attending the University of Mississippi, Chris played 13 years of Major League Baseball, which included him being in the 2016 World Series champion Chicago Cubs, and he was also the 2009 Rookie of the Year for Major League Baseball. Jim serves as the Senior Executive Vice President and Chief Strategy Officer of Fairwinds, an Orlando-based credit union with $4.5 billion in assets. He was recognized by the University of Central Florida College of Business Hall of Fame in 2023 and the Orlando Business Journal for being the top 40 under 40 in 2014. Mike Diament. Mike is the Senior Vice President with Marsh and McLennan. He is in business insurance, and he's also an employee advisory with Marsh McLennan, and he handles lower and middle market division. His focus is on providing solutions to his clients throughout various resources and capabilities of his firm. He's well versed and fully insured, as well as self-funded and alternative programs. We have a great panel, and a lot of these people represent areas that many of you are having problems with. So I'm going to kick things right off. Each panelist, and I'll start with Jim, please take a minute to sort of tell us about yourself. And right now, what is your opinion of the current economic conditions in the state of Florida and nationally?
Good morning, everyone, and thanks for having me, Don, and the FBMA. My name is Jim Adamczyk. I'm the Chief Strategy Officer for Fairwinds Credit Union. We are like Don said, a $5 billion financial institution. We serve members not just here in Central Florida, but all across the United States. My job as the head of strategy is to not just think about how the credit union survives today, but how they survive 3, 5, 10 years down the road. And prior to being the head of strategy, I ran the lending department for the credit union for 15 years over the residential and commercial groups as well. And my feeling on the state of the economy is that if there's one state that I'd like to be in, but better than any other state, it'd be Florida. And so I think from that perspective, our economy is is good in the sense that people still want to come here and it's an attractive state. Housing prices are obviously much higher. We have good migration coming into the state. But unfortunately, we're dealing with the rising interest rates have been a challenge, although they come down a little bit yesterday. And then we're also dealing with, affordability is probably the biggest challenge we face today across all of our segments, whether it's residential or commercial. The challenges with affordability, coverage ratio, and insurance along the way. And so I'm still optimistic about where we're going to be, but there's a lot of work ahead.
Chris?
Yeah, I think you introduced, so I won't bore you with any more details there from my end. But as far as what my belief, the economic situation, I would think, just candidly, I think, the federal government has done a poor job fiscally, and has caused a lot of constraints. You can only give so many trillions of dollars away for free. And so we are experiencing some of that pain, and I think we'll continue to experience more, unfortunately, in the form of inflation as we deal with that. Affordability for everyone, it further divides, as I say, the gap between the wealthy and the poor. The gap continues to grow, cutting out the middle class, which I think is dangerous for us. And I think, frankly, again, the only ones who have really won there is big corporation and Capitol Hill in the economic with those policies. I think in the state, I would agree, Jim. When you look at all those headwinds and challenges that are faced, I think there's no denying. You look at, I think last quarter, Florida reported a 3% GDP growth. I think the rest of the nation was roughly flat or 1%. You look at, I think it's since 2023, over 4% GDP growth for Florida. And I think the trailing 5 years, Florida is number one in the country. So given the facts, I think Florida's done a really good job. Again, we have plenty of headwinds facing us, but when you really want to measure up, I think Florida's done well economically, and I think that's a byproduct of the leadership that we have in place.
Mike?
Thanks, Don. Is this working? So Mike Diament, Marsh and McLennan, Senior Vice President here, there we go. And so focused again on, managing a book of business with clients in various different industries, business insurance, employee benefits. In terms of the state of the economy, I kind of feel like we're in limbo right now, right? We have an election coming. I think that there's been this huge influx of folks coming into Florida. And when I think about that now going forward, we're in a new norm, right? Prices are higher on virtually everything. And it does create a bit of a division, right? And so, are all these folks that just came down here, are they here for the long haul? Will people start to exit? Will the growth slow? I think in addition, just looking at kind of home stats too, right? And maybe some of you folks here can speak to it better than I can, but I know there's been some downgrading of some of the large home builders, from Wall Street on new home starts. So are we in a bit of an oversupply in certain pockets? Maybe, maybe not, right? So I do think we're in limbo, and we're in kind of that space where things could either go the right way or the wrong way, and we're going to know pretty soon within the next 6 or 8 months.
Chris, good morning.
Good morning. I'm Chris Lee with First Choice Door and Trim. We are a local door and millwork supplier in Central Florida. I think that we are in a good place in the state of Florida. We have currently, I checked, getting in preparation for this chat, I checked. We have a 4-month supply of real estate active listings based on the Orlando Realtors Association. So I think that is good. One thing that makes me feel good and optimistic about the future is roughly a year and a half ago when the interest rates started to go up, the national production home builders, I felt like, really scaled their starts back. So I think when and if, as we get these mortgage rates moving again, the affordability comes back, I think we're in a good place where, I always think about, I started my business in 2008, right? So I always think back, okay, so how does this compare to 08, 09, 2010? And I feel like we're in a good spot relative to the inventory that was on the market back then, because when we finally got the affordability and the appraisals right, it just took years to clear that through our system. And I feel like we're in a much better spot with 4-month inventory. Obviously, the inventory is growing, So I think the Fed needed to act aggressively yesterday, and I'm glad that they did. And we definitely need those mortgage rates to come down. I think the stat is 75% of the mortgages in the U.S. are at 5% or less. So I think if we could work our way back down to that 5%, to me that seems like a magic number where people can get out of the homes that they are in and move up and not have to sacrifice a huge interest rate in doing that. So that's my opinion on Central Florida at least.
Wes?
Good morning. And Don, I just want to express my gratitude. Thank you for inviting me here today. And as Don said, Wes Robbins, I'm current president of the Greater Orlando Builders Association, and my company, W. Robbins and Company, specializes in multiple builder services throughout the state of Florida. Just to give you guys an idea, we work with a lot of tract builders as well as custom builders, and we'll touch somewhere in the neighborhood of 10,000 houses this year. With that said, as what's been up here, I believe nationally the economy is actually very strong. I believe out of the G7, we still have the lowest interest rate. But I do think that while this country is great at wealth generation, I think we are really bad at wealth distribution. So that is obviously a problem, and obviously with the presidential election on the rise, something that we have to deal with, and hopefully the two candidates will figure out a solution for housing, as that is greatly needed in this country. Locally here in Florida, I believe the economy is strong. As these guys have suggested, I do believe that the national home builders, Wall Street builders, have scaled back. We have seen that in certain pockets, and I will say even with recent battles, we're still fighting government regulations, and especially here in the state of Florida, and that's going to continue to persist, and that is only going to add to the unattainability of houses until we can come to a solution. And lowering interest rates is great, but when we add, double impact fees to every house being built in this state, it's only going to become more unaffordable.
All right, two things were said in your openings. I'm going to follow up with you first, Wes. Talked a little bit about the politics of things. Both candidates are saying housing policies. One in particular is saying want to build 3 million houses next 4.5, 5 years. And there's also a push to limit nationally impact fees and codes to drive down the cost, because there's a growing feeling nationally that one of the problems with housing is over-coding and bureaucracy in housing. Do you think that's the right way to go?
Absolutely. I mean, we have to lower fees. If you look at some of the counties here in the state of Florida, I would guarantee you that a third of the price of your new home is government-regulated fees, and that is just absurd. And I do believe that we need to address the issue of home resales that go on in this state that pay no impact. We still have over 1,000 people moving to this state every day. The NIMBYism that is occurring, which I can understand to an extent. I mean, we do have traffic issues here, but just telling us that we got to charge more for housing to keep people out is not the answer. And we need to all come to the table. And I really hope that whoever is elected does get us to a point where we can reduce those fees, because it is desperately needed. As said, the unattainability of housing is just going to persist, and telling people not to move here is not the answer.
And do you think we need a national housing program to build?
I would support a national housing program. I'd like to see what is put forth. I mean, obviously Vice President Harris is talked about 3 million houses. I would combat that with, if you look at the current start rate, we're going to build 1.3 million houses this year anyway. So we're going to build 3 million houses in the next 3 years. We need to build 3 million additional houses, and how are we going to do that? And then obviously I know we're going to start touching on labor here in a minute, and that is a big key to building those houses.
And Chris Coghlan, you said something that a lot of independent dealers in this room feel. They're at a disadvantage when facing competition from the huge Wall Street firms. And a lot of times they don't talk about this in public. There's not a discussion. But there's almost seems to be, some would say, an advantage for the folks with the hedge funds, Wall Street, and that type of stuff. Is that what you were alluding to? Do you feel like the structure of the systems have to be aligned more so that small businesses can fairly compete with those out of Wall Street?
I do. I think this is a very complex thing. Great question. People debate this all the time for reasons. At the end of the day, you always are going to have competition. You can't avoid competition. Competition is beautiful done right. key is done right. I definitely think there's advantages, there's trade-offs to small business versus corporate America. I worked in corporate America. I'm not anti-corporate America. I just think that they have certain advantages, and the more that you drive that wedge and create that, really the only people that have won, like I said, is big corp who has the money to be able to increase things and be able to increase spending because the capital that they have coming in is way more. And at the end of the day, that's small business. Like, if you don't like it, don't get into small business. I think it's a great opportunity to try to deliver value to the world, and you can do that in a small business way. So I think, when you talk about a national housing policy, I think it's very difficult to implement a national policy mandate at every state individually. It is hard to fix a one-time solution and just box that into every state. So I do think, we need to be careful with how we do that. Yes, we have shortages. Yes, we need people that need homes. Yes, we have affordable. Yes, we have all these things we've just discussed, and we'll talk more. But that's one thing that I would just be cautious of is, hey man, implementing a mandate that these things have to happen and you have to play by these rules and across 50 states, comes with unintended consequences. And I think we just need to be thoughtful about what those unintended consequences might be.
Okay, so I'll ask you a question this way. Do you think it's the role of government in a situation like this to promote housing? Or
yes.
should we leave it up to the free market?
Well, okay, you're asking, now it's personal, right? So I believe in free market. So personally, I think that's our job. I think we tend to do that best instead of having an institution tell us how to do things across all things. I do think government needs to play a role in awareness. I think it needs to come together. I'm on the board at Habitat myself, and we talk about this issue all the time. We have affordable crisis. We need to do something. Government needs to be at the table. We need to be talking about policies, and we need to think about the unintended consequences of just, broad stroking and saying, hey, I'm going to write this policy and mandate X amount of houses get done. Now you guys figure out the rest of the problem. That's my concern.
Jim, let's imagine something. It's September the 19th, 2019, 6 months before the pandemic breaks loose. You're at Fairwinds, and this question will go to everyone. What's the top two things that have fundamentally changed in your business from 5 years ago today to now that you did not foresee, and you don't think there's no going back to 2019?
The biggest change is obviously the workforce for us. When the pandemic happened, everyone went home, and we brought everyone back probably in the September of that year. But over time, we found that we had to provide some flexible arrangements to retain some of the best talent out there. The number one reason why people choose a new job this year is not compensation. It's because of flexible work arrangements. And so I think over the last few years, we've had to adjust how we manage the workforce and make sure that we have some options available, not for every job, because every job can't accomplish that, but we did need to find a way to manage hybrid and a distributed workforce in a different way. And then I think the other big thing that changed is, even my mom is now using her wallet to pay on her phone. And so the world went digital real quick. And if you don't move digitally to take care of your clients, you're not going to keep them long, especially the younger generation. The Gen Z, the younger generation, my son doesn't even know what a credit card or a debit card is. Okay, if he can't pay with his phone, he's leaving. And so, but that same mentality, I think, kind of goes through business. Almost every one of our loans we close today on the retail side, we don't even see the consumer. And so if you can't find a way to manage that electronic payment back and forth today, it's going to hurt your business. And so I think from our perspective, the way the world works with the payment movement and technology, and then also how we manage a distributed workforce, those are the two kind of unforeseen things that moved quickly.
So I'm assuming you're not adding branches now.
Well, branches are great because they're a good marketing sign. But you'll find that almost 95% of the reason why people go into a branch, you could do on your phone or online. Some people just prefer to go in the branch. And so we're investing a lot on the digital side and digital capabilities, but along with that comes the huge risks of fraud right now. And if you own a small business, you probably know check fraud is one of the largest things we're seeing in small business right now. And so you've got to be able to manage that digitally a little bit better in the future in order to prevent, fraud losses in your business. But yeah.
Chris, difference between 5 years ago and now?
Massive. I'm just going to give again, at Fastening Specialists, we are a master wholesaler that really tries to streamline the transaction, right? You can do that in a multifaceted way. So we niche in metals and commodities. So we are buying millions of dollars of containers from all over the world, and you have to manage that logistically. We had nightmares in the supply chain that you talked about, so we were at the effect of that. Everyone's mad. We had a massive kink. Manufacturers, the tables turns, supply and demand. They increased the cost of those materials and got to do it at less labor, right? And we had FOMO was real here in America, and so everyone's just buying everything they possibly can, chasing the demand. We all want to make it rain, and that's what everybody's trying to do. So big thing for us is we really got to find out who was a true partner with us. It really exposed the transactional relationship versus a partner relationship. So it solidified the partners, and then it realized we all have transactional relationships in business, and it realized, oh my gosh, we need to diversify those transactional relationships. And so we onboarded a lot more manufacturers to partner with at a transactional level, and we ingrained our relationship at a partner level deeper. The second component of that for us was really a technology. We were forced. Grateful again for the leadership here in Florida that we were an essential business and that we weren't forced to have to be like, hey, we got to shut down our business like a lot of these other states did at a policy level. So for us, we had to become async, which means that you need to invest in your technology stack. So for us to be able to communicate it in an async way, we had to invest in cybersecurity. We had to invest in, our hardware, our software, and how we're able to transfer that data, i.e. communication, dramatically changed for us. And we went from blocking and tackling. It made us a better organization. So even though it was painful, I'm grateful for some of that pain.
There is one thing, you brought it up about containers. You're one of the few, you're important. All right, one of the things the pandemic, dirty secret of pandemic.
Yeah.
When the supply chains froze up, couldn't get stuff overseas, we got a glimpse of what Made in America means.
Yeah.
Made in America is a great slogan, but you're gonna pay a lot more, and a lot of times it's gonna take a lot longer. And you're in the fastener business. A lot of your stuff comes overseas.
Correct.
Could you survive as a fastening company if you only bought Made in America? Could you compete?
Yeah, I could compete. I think it just dramatically changes the tides. It's just like everything. It's about strategy, right? There's a trade-off to everything that you do. At the end of the day, we're in a service business. We serve our customers. They dictate what they value. And then we choose to either cater to that value or not, depending on if it fits where we can scale. So when you're in the servant position, you have to choose what that trade-off is. For us, if it was demanded that everything had to be made in America, I think that's great. I think from a political standpoint, from a personal standpoint, I think that's great. But what's the reality? The reality is when you talk about raw materials, that's why China has made the move that they have and why they're a global force against us. They own the supply chain. Those containers, $3,000 a container that comes over, right? You guys would be frightened to know how much we really are importing as a country. The import-export ratio is terrible, in my opinion, from the United States standpoint. This container comes in $3,000. During the pandemic, that was $30,000. For the container. That's not the materials in the container. That's the container. Well, who's the largest manufacturer of the containers? China. And then we had port problems. So now you can't even get the stuff in on the ports, and they're sitting out there in the ports, and they're sitting there for a month. And you can't, and those guys just turned the boats around and went back to China because there was too much money sitting there. So these are real issues that we're experiencing here. We're a lot better, there's a lot of things that have changed. But those, to your point, can you survive? If it made America great, absolutely. If we can be sustainable as a country, again, a lot of unintended consequences we just need to think through. I'm not here to promote one or the other. I'm here to say that we need to think through those, and it would be great for our country if we could be sustainable by ourselves.
Thank you. Mike, no other industry has seen more change in the last 5 years than insurance.
That's absolutely right. Yeah, I think I'll answer this one more specific to insurance on one side and then a little bit more broadly. So I think one word really sums it up. It's capacity, right? And so capacity in our world means insurance carriers write certain types of risks. And when that type of risk becomes challenging to insure, they trim capacity. So maybe they had, let's call it, $200 million worth of capacity in Florida to write a specific type of risk like property, like auto, et cetera. When things start to get more challenging, when they start having more claims, they trim that capacity down. So now that insurance carrier might say, instead of having $200 million in premium out there, we only want to have $100 million of premium out there at one time. So what does that mean? That means that some clients are getting non-renewed. That means that some carriers are pulling out of the space altogether. So it wasn't necessarily specific to the pandemic, but just over the last 5 years, we've seen a massive shrinking capacity in certain lines of coverage. And that's resulted in a lot of challenges for business owners because the ones that are still writing it, they're increasing pricing because they really don't want that risk anyway. So I think that has been a major challenge that we've been dealing with on certain lines of coverage. And then the kind of more broad answer to this is really around flexibility. So the one thing in our business is that technically, as a business consultant, as an advisor, we don't need to be on site. We don't need to be sitting at your location on a daily basis, right? And so prior to the pandemic, it was a lot of local relationships and a lot of, hey, I work with a local resource because, we go to lunch and we play golf and we do whatever together, right? And once the pandemic happened, that opened everyone up to Zoom and the idea that, hey, we can do business with someone not because they live around the corner from me, but because they're a true valued partner. And something I think that Chris had mentioned was it really exposed a lot of relationships. So we saw a significant increase in business nationally, and we are a global firm. We have a presence in every state. But personally, my book of business has expanded nationally much quicker because now, companies are looking for consultants that really know their stuff and that have good resources versus, okay, who is in town, right? So I think those are the two big changes that we've seen.
Okay. Chris, how about you? You're a millwork and door guy. Good times and bad times, right?
Yeah, you're talking specifically from 5 years ago till now. Is that what you're asking? Yeah. So
a couple of big changes.
Yeah. So we already hit on the banking, already hit on the insurance. So I'm going to leave all that alone. What I would say is 5 years ago, it was a lot, and I'm going to look at these gentlemen right here specifically. 5 years ago, people were willing to get up in the morning and go do an honest, hard day's work and be compensated for that and felt really good about it. And I feel like in this country, there's a stigma that's been created. People don't want to get sweaty, they don't want to work hard, and they don't want to get dirty. And you gentlemen sitting here, investing your time, coming to hear us, what I can tell you is learn a skill, learn a trade, and a small bit of business knowledge, and the the limit without a doubt. You guys are, you'll hear a lot of people, not here, but a lot of people outside of here, construction's not sexy, it's not, the new economy, right? But what I can tell you is it's been very good to me. I get up every single morning and we've been able to create opportunities for people in our company, and I feel like we've been able to better their lives. So you're on the right track. Learn a skill and learn about business and how to make money, and it's a great industry, and people need shelter over their head.
Wes?
Yeah, just to echo what Chris said, obviously, I would say the biggest thing from 5 years ago to today is obviously in our world the labor issue, and as he mentioned, these young gentlemen right here are the answer in our future, but not only necessarily what we're seeing with homegrown workforce, we still are very dependent in our trades and our industry for immigration workforce, and that is obviously something that needs to still be considered. But I would say something else that kind of goes along with that is, from 5 years ago to today, look at the dependence that we all have on technology. And then look how fast it can destroy our businesses. Look on a national level, look what CrowdStrike did to the airline industry in 2 weeks' time. This whole country just about fell apart, it felt like. Nobody could move around, nobody could do anything. And I'll tell you, just even locally in my office, somebody ran over the internet hub on the corner. I lost a day and a half of production because nobody in my office can do anything without an internet connection. So we have become so dependent on tech that it is almost scary to think how fast the light switch can turn off, and we can't operate as a business. Nobody, all the young people that work in my office, they don't even write anything down on a piece of paper anymore. So it's nobody has a history of anything if the computer turns off. So that's something that is it's scary, but something that has definitely changed, and obviously that with the growing labor force. So. We just need to put our heads together and move forward.
This question for everyone. Thinking about the housing market here in Florida, what's the top 2 headwinds you think? Jim, I'll start with you. What do you think is going to be the headwinds the next year or so for Florida and housing?
Yeah, affordability is the biggest problem we have today, and it's affecting probably everybody in this room one way or another, and you maybe either realize it or don't on the banking side. So every day we get applications that come in, thousands of them, and the number one reason why is that we can't go forward with someone with good credit and a good job is because they can't afford the payment on the mortgage. And so 5 years ago, 19, you needed to make about $65,000 to $70,000 median income to afford the median home price. Well, today, you need to make about $120,000 in household income to afford that. And so if you just think about how fast that's moved in that short period of time, it's had a significant impact. And then the other thing that on there is, I'll just add on the insurance side, and I'll blame Mike for all of the problems we have on the lending side. But insurance, in my 21 years at Fairwinds, and I was talking with George, our head of commercial, in here as well, and his is much longer than mine, his history. But we've never seen it where insurance is the impediment, is an impediment to getting and purchasing real estate. We've never seen that before. And now it's part of our conversation in the beginning of the loan application, whether it's for a commercial project or it's for a residential project. It's what's your insurance budget? And we've seen deals that have been turned from cash flow positive to cash flow negative simply because the estimate for insurance was about 6 times less than what it actually was. And so that's a big challenge that I think a lot of our developers are having, and a lot of our, even just residential homeowners are having when you think of affordability.
Chris, your thoughts?
Yeah, I'm just going to comment 1 or 2 on that, on the affordability. Again, we're so close to this because I think Habitat does such a great job of raising awareness and getting data to you. Affordability is a multifaceted. You got labor increasing the cost, right, of labor to build the house. You have the material costs that I've discussed. You have insurance. The fact that you're now budgeting for insurance says enough in my head. But it's real. Those are real issues. You also have interest rates up, what it is. And then, Wes, you did a good job talking about the impact fees. Osceola County right here, I think just approved from, I think it's $9,000 it used to be. It's now $21,000 to $25,000. That is showing you clearly we do not want you to build more houses, right? We need to slow this down. Now, I'm not going to guess people's motives. That's not my place to do it, but that's the behavior that it shows. So the affordability is real. And then, again, the inflation. I can't shrink that, the importance of that. When you are making a good living and all of a sudden everything goes through the roof in your cost, inflation is a tax. Please remember that, and that is what is happening right now. So the affordability and the labor, I would just say in the second part, that is just like you guys, Chris and Wes, you just alluded to. Training, getting people to want to get up and go work and learn a trade is just shrinking tremendously. And I'll let you guys get into that more. You guys probably know that field better than me, but I would say that's a huge constraint.
I'm going to skip Mike since he's a headwind. I'm going to go down to Wes. We're going to talk to you last and see what's going on with you. Wes, what's two things you think your builders at Goba are facing?
Government regulations, right? So that is by far our number one issue. And as Chris just alluded to, yes, Osceola County just literally approved. This is one single fee, a mobility fee from $10,000 a single family home to $21,700. Now, while we fought valiantly, delayed that fee, will save our builders millions and millions of dollars, it is still a tax on new homes is essentially what it is. And we are basically telling people, don't come here. And that is not what we want to do. We want to see Florida continue to grow. This is a strong state. It has been for a long time. But we're basically trying to cut off the pipeline. And our politicians are listening to local constituents, and that's what they want. And we need to change that attitude. And like I said, we need better policy around that. And I just don't understand the thinking of just the amount of tax revenue a new home buyer provides to a county or to a city is great. It's actually greater than the fees they're trying to impose on them, and that affordability is just going to continue to get worse and worse and worse, and we're just creating that divide. And then the other thing, and I'll speak to just as far as headwinds, also government related, but construction defects, and I know we want to get into that a little bit more, especially with insurance claims. I know I was telling you earlier, Don, I get at least one a week. I literally got served yesterday with a 4-inch stack of construction defect claims from something that we painted 10 years ago. It has become absurd in the amount of costs that it's driving up with our insurance. It's making it hard for me as a small business to compete with some of the consolidated larger corporations that have the money to pay for those insurance costs. So it is really putting a damper on the small business, which really runs this country and is going to eventually be run by the select few.
One thing you haven't talked about in the whole time I've been with you is the price of material, the price of the basics to build a house. You even hadn't even talked about the price of labor. Everything that seems to be affecting housing, especially here in the state of Florida, is either taxes, impact fees, mobility fees, or insurance. The soft cost. Is that what you're hearing from your builders?
Yeah, I mean, well, the builders are continuing to try to push forward with, they want to maintain their margins as do the rest of us, completely understandably, but the labor costs have obviously gone up. I will tell you that the supply chain issues that we dealt with over the last couple of years really put us in a damper, but that has seemed to calm down. And we have great relationships with all of our vendors and suppliers, and that seems to be moving in a general positive direction, whereas we are out of control on more of the non-fixed costs that we're discussing with the taxes and the insurance.
Yeah, see, the reason why I bring that up, there's a narrative that build material cost and the cost to build a house are the reason prices of houses are high.
Absolutely, and our government officials want everybody to hear that.
But what you're saying, that's not really the case.
It's not the case. No, I mean, labor is still a free market, right? I mean, you can choose to work. This is an equal opportunity employment state, which I love. If you don't want to work for $20 an hour, you can go work somewhere else, as far as I'm concerned. But the free market always works itself out, and I don't think that we need to regulate that anymore, and that's what we're not talking about today. It's the things that they don't want you to see, and it's the man behind the curtain.
I understand. Chris, how about you? What's changed?
Well, one thing I have not heard anybody say yet, because I don't want to be redundant, is the cost of property tax. I was shocked when he said they just raised a fee from $10,000 to $22,000. That is crazy. But everyone here, for the most part, pays property tax either directly or through your rent payments. I was curious if a lot of these vendors here have been to my place. I'm just on a random little industrial road in Ocoee. And I got my property tax estimate in the mail a couple weeks ago, and I thought, man, let's see just what my little road generates a year in property tax. There's 15 property owners. It's $500,000 on one street in Ocoee, on one little street. I don't know where that money goes, but it is an insane amount of money that we all pay. And that's on the commercial front. To Jim's point, I recently acquired a door shop in Daytona, and we did both the asset purchase of the business and the property purchase. I think 10 years ago, and Jim could probably confirm this, the asset purchase would have been the most difficult part of that process. That was a breeze. The property, we were in a flood zone, and the first thing the underwriter and my banker says, can you get flood insurance? Have you talked to somebody? Are you sure you can get flood insurance? Are you sure you can get the property insurance? So those two costs are just staggering.
They are. Mike, we're coming to you. And we've all heard the headwinds, and somehow or another you're in the breeze on all
Always
of
in the
it.
middle somehow, right?
Many believe, as well as the rising cost in Florida of insurance is a major deal. Huge increases in homeowners insurance, condominium insurance, liability insurance, business insurance. They're financially strapping businesses. In fact, even homeowners is getting to the point, like Jim mentioned, it's deal killers in mortgages. As you think about all these things, what are the driving forces? Once again, everyone wants to talk about, use this umbrella thing, it's inflation. But let me first ask the question. Is it across the country, or is it worse here in Florida?
Yeah, there's no doubt it's worse in Florida.
And why? And let's don't use that inflation thing. Everything's going up. Sure. Why is it going up?
Yeah. Well, if you think about the insurance marketplace from an insurance carrier standpoint, and again, I don't work for an insurance carrier. I'm a broker, right? We represent the client and we bring, various different insurance carriers as solutions. But it's a supply and demand situation, right? And so again, if an insurance company isn't required to write your risk, right? They can choose to. And if they start looking at their book of business and they start seeing that their loss ratios from claims are ticking up, right? They still are in a business of making money, right? And so if they put $1 of premium out there that's paid to them, but then they pay $1 in claims, they've lost money because they have administrative costs, right? 20 to 30%, whatever that number is, right? And so when the claims start ticking up, again, carriers start pulling out of the space, they start doing less of it. Well, what happens? The price goes up. The other challenge that I think insurance carriers deal with that most don't realize is that they all buy reinsurance, right? And that reinsurance carrier buys reinsurance on itself too. And so really, if you want to see what's going on in the insurance marketplace, you have to look at what reinsurance is doing. And so I think that from a property standpoint, we've obviously had some storm activity over the past few years, right? Florida it's just going to be a risk that we have to deal with. And I think that, so the insurance carriers are starting to tighten up on that. And what we've seen is that it's gotten to levels where they've priced in a lot of risk. And we have an reinsurance brokerage in-house. And so, we talk to them a lot about this, but over the past 6 months, they've told us, we're set up for storms. And so if we don't have activity, I think the pricing on real estate is going to come down a little bit. And we've seen that in the commercial space. I mean, certain risks that are not coastal, right, that are good construction, we're seeing decreases on the commercial side. And, risks that maybe I'll give you an example. We had, an apartment complex, a real estate owner, and they had apartment complexes all around the country, but specifically Florida, we had a separate program for them and it was $100 million in value. There was one point where we could only get them $10 million in value in wind. We could not get them, and it was 3 times the cost, right? So they're losing $90 million of wind coverage, and it's 3 times the cost of last year. Now that's capacity's come back. We were able to get them a full $100 million over the last year. So I think that it is improving, and we're set up for storms, but.
Well, I guess, though, you still hadn't. Why is Florida so much? We know about the hurricanes.
Right.
But hurricanes don't have anything to do with car insurance.
Yeah.
Doesn't have anything to do with business and property, liability insurance.
Yeah.
Why is that the case?
We're not seeing as many challenges on general liability. The real challenges in auto, I think, are related to claims activity as well. And we do get from carriers their loss ratios. Some of them publish them, and they're not good. And I think that it's not necessarily the physical damage of the car. All the rate is in the liability. And what we're seeing is fender benders where there's no damage to vehicles, but the third party that was hit is, going through all of this medical treatment for maybe a pre-existing claim that can't be proven it was pre-existing. And these are hundreds of thousands of dollars of claims that the carriers have to settle on when really there's virtually no damage. And I think anyone that owns a business that's sitting in this room that has had an auto claim, can probably attest to that if you're a walking, banner for an attorney. And I think that's really hurt the industry because we're seeing a lot of claims activity. And then you're getting a double whammy on work comp too, because sometimes your staff are, saying, hey, I'm hurt too. And are they hurt? Are they not? It's very, very hard because, they always err on the side of caution.
So other states are doing better managing their insurance programs.
Well, yeah, from a legal perspective, yeah. I mean, just the cost of auto per state, California is really bad, Florida is really bad, but there are a lot of other states where it's significantly better to the point where, again, we manage national programs and we look at auto rates in different states and, we're scratching our heads saying, hey, this is, sometimes 5 to 10 times less the cost of an auto in the state of Florida.
And one other topic, I think one of the emerging issues in our industry is construction defects.
Right, yeah.
Wes alluded to it, or I'm going to ask you both to comment on it. Give us a brief overview of the construction defects issue, but that to me could potentially cripple a lot of people in this room.
Yeah, and to my understanding, the law was enacted in 2003 and has essentially created Chapter 558 to eliminate the need to litigate. So, you were supposed to try and settle things outside of it, but it really doesn't prevent you from going to litigation. So my understanding is there's just a notification process and it really allows you to gather information. But what happens in our world, in the insurance world, is, anyone that's touched that project gets sucked into the claim. And then it becomes very, very challenging for, because the insurance companies always have a duty to defend you, which means that if someone sues you, whether they rightly sued you or not, the insurance company is going to have to spend attorney's fees to defend you. And it just gets really messy. And everyone has deductibles that have to be met first. So, everybody seems to get sucked in and it's very hard to unravel.
Wes, you alluded to, you got to stack them the other day.
Stack, yeah, and like I said, this is just from something that I painted, and as Mike was just telling us, I'm just one of probably 50 people that received that 4-inch stack yesterday. The landscaper, the window installer, the roofer, every single trade that touched that house, whether their trade was specifically involved with whatever the defect claim was, is going to be sued.
Can I ask you a question? You got that stack of notification. Take us real quickly through the process. What happens?
So it'll be about a 6-month process. So obviously our insurance company will try to defend us. Eventually, after many mediations that I'll have to spend my time going through, and depositions and everything else that they require us to do, at the end of the day, there will be some settlement between our insurance company and the plaintiff in this situation, and we will inevitably end up having to pay that settlement, as will every other company that got that stack yesterday.
And then Mike, has this has been a newer phenomenon in the last couple of years. Has that been priced into the insurance market?
Absolutely. And I can tell you that, again, we talked about this briefly earlier. There are applications that you have to fill out about what your business does. And one of those questions on the applications is, are you doing residential, right? And instantly, if you're doing any residential work, you're paying more for insurance versus commercial work, right? And then kind of on top of that, are you doing any tract home work? Because again, it's priced into the market, right? If you're doing things on multiple homes, there could be claims on multiple homes, right? So it's bigger. A lot of carriers don't want to write it. They know that these construction defect claims are coming. Again, they have a duty to defend. They have to spend money in attorney fees, which again, jacks up the rates. It's been priced in. It's very, very challenging.
All right, Jim, you've alluded to getting mortgages through, but has the insurance issue created problems for you? And I'm going to tie a little something into you. You mentioned about the cyber issues, the cyber fraud. There's insurance for cyber fraud, and that's becoming a big issue. How concerned are you that in protecting yourself against a ransomware attack?
So just On the insurance side, we start right up front now, like I mentioned a little bit earlier. So it's part of our process today. And most banks now and credit unions are going to start the insurance process right away. It's like Chris was saying. Did you talk to insurance? Is it really there? And some of the challenges that we're seeing today is they're coming back to us, the borrower, and saying, well, can we just not put wind in the policy? And we're like, well, no, because if the house blows away, we can't pay for it. So that's becoming a challenge, and we're dealing with it by being more advisory up front and then trying to find solutions with partners in the very beginning so that it's not a problem. We own an insurance brokerage, and 5 years ago it was neat because you could put ads out and like save $500 if you move your insurance over here. Now it's like, hey, don't go up the highest by moving your insurance is the new ad. But just on the cyber side, so we practice we have a business continuity plan, and cyber is a real deal. If you knew how many times the bank you're with is being attacked by cyber, you'd probably fall off your seat. Every day there is thousands of attacks that are coming in, and a lot of these attacks are from Eastern Europe, or other enemy states, and certainly there's some in the United States as well, but they're trying to hack in most of the banks all day long. And so we have to be prepared for cyber attacks to come in, for ransomware attacks, and that's just a big part of what we do as a company today. And actually any business right now, you're vulnerable if you don't have some protection on the front end. Especially if you have customer information and that gets out, it could seriously damage reputation and kind of, what happens going forward. So it's a big part of our business now. And the insurance is not cheap, by the way. It's super expensive. And there's big deductibles. So it has to be a big loss before the insurance will pay out as well.
Chris, is insurance affecting your business?
Absolutely. I mean, there's no question about it. You talked about auto. I basically need to go talk to Mike after this meeting, because it's real. We had 3x, just last year alone on some of the stuff. We run our own trucks, and you got insurance, you got claims, you're running flatbeds, you're delivering heavy material, there's an accident. We have a huge litigation problem, and one of the things on the insurance I just wanted to comment on that I don't know who knows this, but like Florida, a big part of the insurance, Florida is the #1 fraud state in the country. Okay, that's the problem. And just like Wes had said, you file a claim, you will have to pay that at some point. You're either going to get dropped by the carrier or whoever else you take. They have your record. They know what you do. They're risk mitigators. They're actuaries. They're the best in the world. They're not pulling one on them. So we have huge fraud problem here that are running around just trying to get new shingles or whatever else they can to make money, and so that's a huge problem. We've experienced that. Auto, you said property and casualty is going down. That's why I need to talk to you. I'm not seeing that.
Softer.
I'm going to talk to him after this. I'm going to go first.
Well, wait a minute. Who's our carrier? RoMac.
Yeah. All right. So those are our pains, and now I need to talk about self-insuring or something I can do to cut down because our risk has only gone up, and we're paying more for more risk.
Chris, how about you? Has insurance costs affected your business?
Absolutely, it has. And so, we've touched on a lot of that. One thing we didn't touch on, and it affects you, me, everybody out here, the general public is getting more knowledge that our commercial vehicles have much higher limits on them than any other pedestrian vehicle driving down the street. So when our claims could be a $30,000 claim, it's going to be a $100,000 claim right away, because what's the first thing when they call Dan Newland and Dan sends his letter, the very first thing Dan says is, send us your policy documents, because they just want to see how much insurance do you have. So anyways, and what I see is billboards on the road now saying big truck attorney. And so that's just keying everybody off that as we deliver our items on vehicles with our business logo on the side of it, they know that those are huge claims, huge claims. So there's that. Workers' comp, certainly. We build and deliver heavy doors, and I wish there was a way to automate that process. But if you figure it out, I'm going to spy on you and see what you're doing, because people hurt their back, and there's no worse workers' comp claim than someone that has injured their back, and trying to get them back to work and off of workers' comp can be a very costly, long process.
Wes, you've talked a little bit about the destruction defect insurance, but you're in a unique business. You put siding and stuff on the envelope of the house. And let's face it, that's where a lot of the problems, people make claims. Do you worry about the future of your business and how these construction defects lawsuits are heading? And do you think at some point you're going to have to take some measures to either do a corporate protection against yourself or whatever? I don't know what the answer is. Have you ever, does that concern you?
Keeps me up every night. I do worry about it constantly. We all have to, and I'm sure Chris would agree. I mean, our labor force, the skilled trades are not so skilled anymore. So the only way that we can compensate for that is to hire more educated people to supervise and manage, and that oversight just becomes more increasing, which increases more cost. But you know, I will tell you, I mean, we pride ourselves on doing it the right way, but there's a lot of people out there that are not doing it the right way so that they can meet the costs and win bids so that they can do that at a lower cost. But yeah, no, there is definite issues with construction defects, and you know, if you don't do it right, the house is going to leak and there's going to be water. But this, you know, I tell people all the time, you know, this state, because of storms and not just hurricanes, I mean, there's daily sideways rain. I see it out there every day. I mean, in the summertime, it rains every day. And there is constant issues, and I do understand the need for construction defects, but the inability of us to have those skilled trades that we used to have is also contributing to the problem, and that's why it's important for these young men here and anybody else that's willing to get out there and work. And like I said, I really do think that we need to address our immigration policy, because until we find a homegrown workforce, we need people to work, and we need to train them properly.
I'm going to turn to Jim now, because yesterday afternoon, Jerome Powell of the Federal Reserve surprisingly took a lot of folks, the Fed dropped interest rates a half point. I mean, it expected a quarter point. They've signaled quarter point drops maybe through July. Professor Siegel from Wharton School of Business this morning said he could see interest rates eventually wind up 3.5, some people saying 3.29. First off, we've been in a high rate environment for the last couple of years to calm the inflation issues down. Inflation's been a worldwide problem, seems to be calmed down. What do you see how all this change and this different trend on interest rates will affect business? And I'm guessing, you know, I think direction, do you think it's going to be sustained, number one, the continuous drop, or do you think the Fed may back up based on data? But do you think we're going to get to a point if consumers believe, okay, if I wait 3 more months, I could get another 75 basis points off, or if I wait 4 months, I could get 100 basis points? Do you think by the Fed signaling what they're possibly going to do the next 6 terms, it may put builders and other folks, lock them up a little bit?
Yeah, I mean, definitely unexpected yesterday. We didn't think there was going to be a 50-point drop. But if you go back 1 year ago, we thought the Fed would have cut 6 times this year by now. And so it's a good business to be an economist, you know, because you can kind of just say what's going to happen, and it doesn't really happen most of the time. But you know, the rates dropping is good news. I mean, a lot of like tough things up here, but rates dropping is good news. It's going to ease affordability. And so if you think about this, like the average home price in Orlando is about $450,000. Okay, so every 1% drop in rate is about $280 in monthly payments. And so what that's going to do is going to put a lot of people into the market. There's a lot of first-time home buyers that can't afford the home because it's too high. But the lower the rates come, the more they get, they're going to be incented to get back in the market. It's not going to incent the 7 out of 10 people that have a 4% mortgage or less, and it's certainly not going to incent the people that have a 3% mortgage or less, and that's 1 out of 3 people, by the way. And so rates probably need to come down, we think, to about 5% on the 30-year fixed, and we'll see some movement. And by movement, I mean existing people there's a lot of demand. Like our issue is not a demand issue. There is a lot of demand. It's an affordability issue. And so once we can ease affordability, you'll see people move. And the closer the rates get to 5, the more people sitting at 4% are going to go, okay, yeah, we'll make the choice to move, and we'll move. Because there's a lot of people that want to move, but if you're like me and you've owned your house for more than 6 years, it's doubled in price. And so you're like, hey, honey, yeah, let's move. And well, where are you going to move to? Everywhere else is doubled in price too. And so you're thinking like, what do we do next? But I think the closer the rates get, the more you'll see those people that have lower rates think, okay, I'm willing to make the move. And that'll be good for our business, I think. And so from a year from now, we're budgeting rates to go down at least another 100 to 150 points next year. And that's where we think they'll end. We think Fed funds will end somewhere around 375 in that range. And that'll put the 30-year fixed rate somewhere around 5 to 5.25. And if that happens, it'll be good for us.
I do have to ask you one question. There's a countervailing argument that the Fed took the 50 basis point drop because they got it wrong. Now there's concern about the job market. Do you think the Fed was too late coming to the party?
The government's always wrong. I mean, if you think like, if you remember 2021, they're like, oh no, it's not inflation. It's just, it's transitory. I mean, I never heard the word transitory until 2021 1,000 times. They were wrong then. I think they're probably a little bit late to the game, but I think that's why they're trying to surprise people a little bit. Is like, hey, let's just try to juice the market a little bit because it's slowed down a lot. If you drive by a car dealership, you'll see there's cars on the inventory now. That wasn't there a year ago. Okay, and if you drive in your neighborhood now, you see for sale signs, and you didn't see that a year ago. And so they were selling just as fast as they were putting them on the market. So I do think, yeah, there is I think the Fed's late, but I don't think it matters at this point. Just let's get the rates right so that the consumer can make a good decision for them and their family.
Now he's talking about the interest rates. Just real quick, I'd like to sort of get your quick opinions. Has the higher interest rates forced you to do something differently in your business?
I think absolutely. It does for everybody. For us, we are fortunate. We talk about controlling your cost, right? I think, I forget who once said it, but I mean, prices and revenue is really cyclical, but you can control your costs, right? And those are permanent that go to your bottom line. So one thing we do at our culture is we try to be very fiscally responsible. And so we are not cheap, but we are stewards. And that's what we say. And so controlling that cost allows us to have cash when everyone else is scared in the street, right? We're able to buy. So for us, we were able to buy trucks. We were able to get them cheaper. We weren't paying $10,000 over sticker price when everyone else had FOMO and needed stuff. We were able to buy software at steeper discounts because less people are buying software. We're in the middle of an ERP integration that's painful, but well worth it so that we could build the right foundation and keep the foot on the gas. So for us, we were able to invest in more things, because we were able to control the cost as much as we can when the times were just chaos. And so that's really a kudos to our team. And we do a profit sharing, so for them, it's not like I have to watch it all the time. They get to benefit in that. They get to see a direct correlation to, hey, when we're saving on that cost, that's more money in us in a bonus program. That's great. So now our whole team is all centralized around, okay, where can we control costs so it doesn't leak out? And then all of a sudden you look up and you're like, man, we're making so much more money. What happened to this? The fixed cost isn't really fixed. It actually has gone down. So something we're proud of, we're grateful for, but absolutely the rates have been I don't want to say blessing because I'm not applauding any of that, but we have been able to benefit from that and be able to acquire certain assets that we otherwise were not buying 2 years prior.
Mike, is there any effect on the interest rate?
Yeah, I mean, I think, it just puts a little bit more pressure on businesses, right? And a lot of our clients have certain lines of coverage that they have to pay in full up front. And so those clients will opt to premium finance those. And when you're getting a premium finance agreement that used to say, 4 to 6%, and now it says 13 to 18%, that's a big jump, right? And it's, dictated based on the size of the premium, but right now, I mean, most of the premium finance agreements I see are, around 12, 13%. So it can get, pretty expensive.
How many of your customers in certain areas have made the decision to self-insure? Are you seeing a move to self-insurance, just saying, hey, I can't afford it, and I'm roll the dice?
We are, but what I always challenge them to consider is that those that are looking to enter in a transaction in the next 3 to 5 years, it's not the smartest move, because usually private equity wants to unravel that because they don't want the collateral tied up. And so there's a shocking number of clients that I have that are thinking about exiting. And so they're just biting the bullet now until they prep for that exit. I mean, like 90% plus of my clients are thinking about an exit in the next 3 to 5 years.
So you're telling me 90% of your clients are thinking about selling their business,
Correct.
exiting?
Yeah.
Are they in the construction industry?
Some of them are, yeah. So, yeah.
We need to talk again.
Yeah, it is a shocking number. Because I do a lot of private equity work, I have the conversation with them. What's the plan, like the strategy like? And almost all of them are saying, I'm thinking about doing something. It's in the near future.
Well, Chris and I, we were looking at each other. First off, we were out of shock of the interest rate, and now that's okay. Chris, how about the interest rates? What's the effect been on your business?
So that's interesting. To Chris's point, we're also going through a software conversion. We've also bought some vehicles this year, and we actually bought another door line that had just been, all of a sudden those people started to, where I had to chase those people down, whether it was the, the software people or the Orlando Freightliner never wanted to sell me anything for a couple of years, and anyways, and the door machine manufacturers, all of a sudden they start coming to us, and so we've ramped up on all of those things over the last 12 months, and then what we did is we saw our production builders pulling back on starts. Like I said, as soon as those interest rates started to tick up, they wouldn't replace their superintendents. They started letting people go in the purchasing departments, and this goes back almost 2 years now. And so we took a strategic strategy to work. We picked up different market segments that we would have never been interested in previously. So the interesting thing is we have those new market segments. Let's say those interest rates come down, right, and then the production home builders pick up. I have a problem on my hand because I don't know how I'm going to make all those people happy. I'm not. So that's kind of what I think. Like, where do we go? We've supplemented our business, kept ourselves busy, kept our revenue where it needs to be. And so when those production builders turn the faucet back on, it's going to be really tricky.
Well, you just brought a point I've been listening to all day. We're running about 1.3, 1.4 housing starts.
Yep.
Historically, as a nation, we've been 1.8, 1.9. In recent years, 1.5, 1.6, 1.7. All right, banker over here's dropped interest rates half point. It's going to go down another half point. All of a sudden, housing becomes available. What do we do? I know a lot of folks back here, they've not geared up production. They've not had it. We're hearing about mill curtailments in Canada and all kinds. Are we on the cusp of another 2021 and we don't realize it?
Well, I feel like it's going to come on slower, right? Let's hope that the federal government spends less money in
Can I interrupt you?
Yeah.
Mr. Banker, you drop interest rates a point, mortgage rates going to pick up real quick, people going to buy houses real quick.
The purchase market will pick up some. What's going to happen is you're going to see refinancing activity go pretty, and they're going to take cash out.
So you don't think it's going to be a big?
It's not going to be huge, but it's going to pick up.
Can I ask Wes, interest rates drop a point, you going to see a surge?
I think we are going to see a surge, but I do agree with Chris. I think it'll be a much slower surge. I think
Okay.
the builders learned a lesson in 2021.
Okay, so I'll go back to my original thing. Goes to we go to housing stops 1.6, 1.7. How do you handle it?
I don't know yet. That's what I'm going to be working on after we get the software implementation done. That's the next problem, right? I took the delivery of a truck just last week. We always add to our fleet, and we're going to have to, again, it goes back to these fine young men here. the opportunities of someone that knows a skill and is willing to work is endless.
Well, the thing you were talking about containers early, the molding people need to find out where you're getting your containers, because they just told us they're paying $8,000 to get containers from South America.
It's a much shorter trip from South America too. I don't understand that either, but that's a whole other story.
Wes, how's interest rates affect you?
Well, there must have been some collusion. So we also have gone through a software change, and I changed out all of my vehicles this year. So while things did slow down, I'm a big fan of, you guys must be too, Warren Buffett used to say it right, when everybody screams fire, everybody runs away. He ran into the fire, and that's kind of what we've done, and we were in a good position to do that. We also were very fiscally conservative with money. So we've expanded our reach, we've expanded our territory, we've expanded our human capital, and we've put in place, hopefully, to compensate for the surge, so-called surge that we see coming, and we're just trying to be ready for that when that faucet turns back on.
Well, we've got 20 minutes left, and I got a few more points to go through. So if you don't mind, we're going to pick up the pace a little bit. So I'm going to start with you, Wes, because this is the best topic of the day. How's labor today versus last year, and what are you seeing in availability, rates, quality? Because while it may seem a little better, in some cases it's a little worse, and you're dealing with a lot of subs. What's your opinion on labor?
Well, like I said, we're still dealing with that quality issue, but hence the investment in human capital. And I've also taken this pause and reduction in home starts to cycle through a lot of my subcontractors, and I've brought on a lot of new ones and gotten rid of a lot of bad ones. And we pride ourselves on trying to be the best out there, and I think that anybody that's not doing that is probably putting themselves in a bad position for the future. But labor is more expensive. There's nobody on my payroll that makes less than $18 an hour, and most of them are making $30 to $40 an hour. And it's getting more and more difficult to be competitive in the marketplace to do it right. I tell all my builders, I'm not the cheapest guy out there, but I will tell you, not only will I do it right, but I am a legitimate business owner. I pay my taxes, I pay my people appropriately. And in order to do that correctly, it costs more money to do that business. And so labor is only going to become more constrained, and until we can find a legitimate solution to the workforce in the field, I think it's only going to continue to get worse, and things are just only going to continue to get more expensive.
Chris, how about the door plant? You've got labor too, and a lot of your labor is like his.
It is difficult. That's, I saw that question. I thought long and hard about it. So what I can say is I would say the salesperson that's motivated by commission, or perhaps someone working in the office, those people are more available than they've been in quite a long time, I feel like. But the people that need to case those doors and load those doors and deliver those doors is a constant battle. We've outsourced all of that. We go to a recruiter, a staffing company, because it's so cumbersome to interview people. First of all, you have to do a phone interview, which is great. Then you schedule an in-person interview, and 75% don't show up to that interview. Let's say they do take the job, you get them, through the payroll, the e-verify system. They start. We had a person start last week that at lunch on their first day clocked out and said, this just isn't for us. So the amount of time we invest trying to recruit talent, we think it's cheaper to just hire a staffing company and just kind of a constant flow of people through the shop. It just never stops for us.
Just one question. A lot of staffing companies around here work closely with Hispanic labor. Mm-hmm. In a door plant, because we run a door plant, also we understand you got to read 8050s, left hand, right hands, out swings with the. How do you overcome that?
We don't. I would say we start people out at the most simple, mundane task, right? Where everything is already boxed, all the casing legs are already pre-cut by someone that does know how to read a tape measure, and they're just stapling that casing to the door. And so that's where we start them, where they're truly, assuming you don't put the staple over your hand, we're really not going to have any problems today, right? I mean, it's the reality.
Now, based what Chris said, Jim, you have the easiest time of hiring people. Anybody, if you're working in the air-conditioned office, those people are just everywhere.
Yeah, you'd be surprised. They just fall. They just don't come into work all the time. But yeah, no, it's interesting. In all of our businesses, we put the faith of a lot of our business in the lowest paid employee inside the company, and so you just got to train and you got to retain. I mean, it's a vicious cycle. But we found that the best talent we have, we've been training internally. And we promote them and try to keep them as long as we can, because that's the best way to grow a workforce right now, because otherwise it's just churn and churn and churn, and it's very difficult to do.
And Chris, how are you handling your labor, and what are you seeing on the labor side of it?
Yeah, I mean, same things. I think there's just a lot of stuff in life is about your mindset. You know, so for me, my mindset, we run our company like a sports team. You know, I was fortunate to get to do that. So for us, it's like we had a mantra: if you don't like it, get a hit. You know, and what that means is if you don't get a hit, you get fired, right? So it's that black and white in professional sports. You know, it's not how we run our culture there, but we say, hey man, stop complaining about it, get better. You know, it's not going to stop. You know, you're always hiring. Don't ever stop hiring, right? And talent matters, culture wins. And you know, we deliver on culture, and we need talent, but you can't win in perpetuity on talent alone. And so how do we cultivate that? You got top of funnel that you're talking about. It's a multifaceted thing to retain. When you retain, you compound. That's how you win. And so how do we compound? And there's a lot of strategy around that. You never stop hiring. It's a mindset. I don't want to hear any more complaining. That's life. That's what it is. Get the job done, or go on somebody else's team and go complain on their team, you know, but we got to never stop hiring. We got to develop. That's part of the thing. Like, we can't just passively get them in the door and say, check box, I'm on to the next one. You got to develop that person. They want to feel developed. And that's why you got to keep growing as a company, because all of your good talent will leave if you do not stop growing, because they recognize their game and their value, and they will go somewhere else that will appreciate and will build with them in their personal value. Yeah. So that's kind of our mindset, and we're not perfect at it, you know, but every day we're getting better at it, and the workforce is not going to happen. Don't stop hiring. Don't complain about it. Get better.
Mike, are your clients seeing harder times in Florida and easier times elsewhere in labor, or is it about the same?
Yeah, I think it's challenging all across all fronts. And I would say that uniquely, I think this is an interesting story specific to our business. Private equity has really challenged our business over the past few years when interest rates were low. These highly leveraged brokerage firms were throwing insane amounts of money at our staff, so sometimes double what they were getting paid. And we've kind of seen that come full circle. We're a publicly traded company that operates almost in silos. They allow us to really run our own P&L. And you know, now all those firms that were paying these staff double, they're now on hiring freezes. Their culture is, you know, challenging for them. So I think that it's been interesting and somewhat tied to the interest rates.
Wes, next question. 1 year from the day, September 19, 2025. What's the economy going to look like? What's the housing market going to look like?
I think next year is going to be a really strong year. I think Dr. Dietz up at NAHB would agree. I think overall in the country, I think we are going to see back to that 1.6 million housing starts in the country, and I think we're going to see really strong growth here in Florida. My concern, and I think I briefly spoke with you about it earlier, is especially here locally in the state of Florida as we move forward, there's also an issue with 404 permitting, which is wetland permitting. And if anybody looks around, pretty much everything in Florida is wetland. And we have a lot of backlog and a lot of issues with development moving forward. And I think once a lot of the home builders that are in good land position will probably continue to build, but a lot of home builders are going to start having issues with getting their plats developed so that we can put in the infrastructure, start building houses. And I think you're going to see a huge delay, which is only going to constrain the supply and demand that's going to go on. Because I think that with interest rates coming down, I think people are going to want to move again, and I think a lot of people are going to want to move to Florida. So it's housing is only going to go up. We're at $450,000 now. I bet that's going to be closer to $500,000 this time next year.
So based on just back of the book arithmetic, you're seeing a 10% plus increase in housing next year.
Absolutely, yeah, especially here locally, but I think that we'll see that in most of the pro-development areas in the country.
Chris, what's your crystal ball showing you for next year?
Yeah, the exact same thing. And Wes made a really good point. Something I hadn't thought about was back to those national home builders, they just don't have those lots ready to go. And we saw that the last time that things really fired up, and they're buying all of those, 40, 50 little infill projects and getting those going so they can hit their numbers that they need to hit for Wall Street. And it takes so long, to Wes's point again, just to get all of those projects through to an approved plat with, and ready to build homes. And I think he's 100% right. That's going to be our problem. But I think definitely as these interest rates come down, there's a ton of pent up demand. Everyone I talk to wants to move. I don't think we have any issues. And our current level of inventory is strong. So I don't see how it doesn't increase next year.
Mike, what's your crystal ball showing you?
Yeah, I think we're seeing homes sitting. I look around the neighborhood now, and homes are sitting. So maybe some things are overvalued and prices come down. I worry about consumer debt, right, and thinking about just how much debt are people racking up on their credit cards, and there's a lag effect of that for a few years. So does that hit next year? Who knows? But hopefully, everything works out.
Well, your business should be good since you've announced a price decrease to everybody. So
In pockets.
you can stand in the corner and we'll all. Chris, how about?
It's a great question. So many variables there. You're talking about political. We're in we have so many things that could change and fluctuate quickly. You got geopolitical. You got global issues. We are at war at several different countries. I'm guessing you're asking me. I'm gonna say that the housing, I think it's gonna go up. I'm confident in our state. National wise, I think you slightly up. I'm maybe not as bullish as Wes, but I'm not an economist. I've been wrong many times in my life, so do not think that this is gold here. And I think we're going to have a lot of resin still and some pain. I don't know to your point, I don't think it's in a year, but I think it's several years down the road. We're going to have some pain, in our economy with this debt cycle, and how are we going to solve that? It's a massive problem.
And I've got to ask one question because you brought up the importing.
Okay.
10 or 20% tariff, if it were imposed, would it hurt you or help you?
You end up passing. You know who it hurts? It hurts the consumer. Everyone's got to make their margin. Everybody's saying the same thing. When it got through the roof, I'll tell you this, full transparency, we did not pass everything on. We took the hit on the margin. We chose strategically, I chose for our company that I wanted, because I was fighting for long-term relationship with our customers. I chose to take the hit on 4 to 5 points, which is big when you're talking about millions of dollars, to not pass that on. I wanted to retain my customers. I did not want them going elsewhere. And the quickest lever all of our customers pull is, hey, you're more expensive than so-and-so, and I might leave you, if you don't get your price right. We have to play that game. I always tell our team, hey, if you don't like it, you're in the wrong business. Price is part of it. Price and availability. Price is king, availability is queen, but they're both royalty. So you got to get it right. So I would say we'd pass a lot of it on. I don't know. It depends on how high it would go, how fast it would go, and ultimately the consumer loses.
What do you think this time next year is going to look like, Jim?
Rates will be lower, demand will be slightly higher. We're budgeting about flat growth for residential and flat on the business side. We don't think there's going to be enough. We're hoping there's more demand, and the salespeople are just underestimating. But we do think there'll be a little bit of demand increase there as well. The big challenge that I watch is just two things. The biggest one is credit card debt. And I'm glad Mike brought that up. It's the number one factor that I watch in the balance sheet. If credit card debt moves quickly, it's the leading indicator of a problem in the consumer's pocketbook. And when that happens, it slows their ability to purchase things. And credit card balance have gone up double digits for the last 2 years. Now it's slowed down, and the average rate on a credit card is 23%. So you're never paying it off, and so I worry about the middle lower income consumer and just their ability to afford. And so, but I hope it's better.
We have about 7 minutes left, but this is an important question because this is going to take a little imagination. A black swan event is something that no one sees happening. It's unforeseen, it's effect on the business, economy, or whatever. What black swan event concerns you most over the next year? I'll start with Wes.
Yeah, obviously it's a tough question. I mean, who saw COVID coming, right? And
Yeah.
the world shut down. But you know, potential things on the horizon, and I think you said it best. I'm very concerned about construction defects, and lawyers used to chase ambulances because there was money and injuries and all that, and now they've found their new path through construction defects, and they're door knocking, and they're coming, and all it's going to do is just be passed on to the consumer, and it's just going to hurt the consumer. And I think that what's happening is I said it before, but the wealth generation in this country is unbelievable, but the wealth distribution is really bad, and I think that as stewards, we've done a really bad job of bringing up our younger generations and distributing that wealth to them, and now we've created this gap that is only going to increase the wealth for the lucky few, and the rest of us are going to have to fight over what's left.
Chris, as you think about things, what black swan event worries you?
Well, what if these interest rate reductions don't work, right? Then we get into this weird kind of stagflation situation. Unemployment's going up. We've already said the credit card goes up. If we lower interest rates, it doesn't spur demand. I mean, that's a serious concern. That's I think our biggest risk.
Good point. Mike, what's your black swan event that concerns you?
Yeah, believe it or not, and I've been in Florida long enough to know we're probably okay, but a major hurricane event that just really rips through the state, or multiple of them, what it does to insurance obviously is a problem, but decimating part of the state, I mean, it's hard to recover from that.
How much is climate change really affecting your part of the business?
I think that the actuaries look at, what are the storm projections, right? And so they price that in. And again, kind of to the property conversation earlier, they have priced in a lot of risk right now. And so if we run clean for the next year or two, I think we might see prices in certain pockets, again, with better risk coming down. Yeah, this can't be on everything, right? But yeah, I think, yes, it's affecting it. And, Texas is a problem, California is a problem, and it seems to be getting worse.
Have you noticed we were getting lumped in with California a lot today?
Yeah, California and Florida insurance problem, Charles.
Chris, what's your black swan event?
I just have concern globally. So for mine, it's war. That's the black swan. I mean, and I think war looks a lot different than the way World War II and the way we used to fight it. I think it's in a cybersecurity place. I think it's in 5G. I think it's in technology. Just like I think Wes said, he couldn't even get it. The airlines, I was in Puerto Rico when that happened, speaking at an event in Puerto Rico. People couldn't even get out. To me, where we are at, the relations that we have with China, Russia, North Korea, Iran, there's other ones, how little of relationship we have, and the amount of friction that is there is real. So for me, if I had to pull one out, Lord willing, I'm wrong. Somehow we kumbaya this and we get past it, but that would be the black swan, is that we are at war, and the war looks a lot different than the way it used to.
Hope that doesn't happen. Jim, what's your black swan concern?
Definitely geopolitical. I think one thing that I'm definitely concerned about is the amount of money that the government is spending. They're spending we're going $1 trillion in debt every 90 days. And if you have a credit card, at some point you hit the limit, okay? And you can't keep spending. And so I'm definitely worried about how much the government can continue to spend and what that does. Is the rate cut really going to do it, or are we going to have to raise rates again because inflation goes back up? And so that's my biggest concern, is that the rate cut is too soon and inflation comes back in because the government keeps spending money.
Well, gentlemen, y'all have given us great insight. You've done a remarkable job. And I thank you. And at this time, would the audience join me in thanking our panelists today? They did an absolutely wonderful job.
From foundation to rooftop, RoMac's got you covered.